How would you like to turn your portfolio up a notch? Imagine 4 stocks right now that could give you serious gains if you know where to put your money. In the next few minutes, I'm going to show you 4 companies riding big trends: AI, rare earth minerals, biotech, streaming, infrastructure, and why this month, October 2025, may be your chance to jump in before the crowd. If you stick with me, by the end you'll know what to watch, what could pop, and whether the risk makes sense for you. Let's get into it: benefits, signals, possibilities, and what might go wrong. First off, why this matters. When you get in early on a trend, gains multiply. If you pick stocks after everybody already knows about them, you're already late. But when companies are positioned in sectors that are accelerating, with catalysts, with analyst attention, that's where you can generate outsized returns. Also, knowing these gives you something to talk about. Maybe you earn more, maybe you avoid losses. Either way you win. Now, let's have a talk about Jailers Ease. You probably know cybersecurity is hot. But Jailer is not just any name, it's one of the leaders in cloud-focused security, especially in the secure access service edge SaaS market. Its annual recurring revenue just hit about $3 billion, up strong. Revenue growing over 20+% year over year. Analysts are giving it buy ratings across the board. Visualize this: real-life dashboards, employees logging into corporate networks, threats being blocked in real time, servers humming with encrypted traffic. Z's is the guard at the gate. The benefit here is recurring revenue. You can count on cash flows, growth in cybersecurity demand, more remote work, more cloud, more threats. Risk, competition, valuation is not cheap. Macro slowdown could hit tech broadly. But for growth investors, Jailer offers both momentum and some defensibility. If Jailer breaks out past key technical resistance, this could run a lot further. Now, let's have a talk about Elastic SC. Elastic is the company behind search, logging, observability tools, data analytics. They just announced a $500 million buyback plan, raised their revenue guidance, which tells you they believe in themselves, and they're leaning heavily into AI-driven use cases. Imagine engineers building observability dashboards, developers searching huge data logs in real time, companies detecting anomalies before disasters. The images, clusters of servers processing search queries, graph dashboards lighting up, code being deployed. This is tech that often runs quietly behind the scenes but is indispensable. The benefit: with data usage exploding, Elastic is well placed. Buybacks plus raised guidance equals management putting their money where their mouth is. Risks: markets hate surprises. If any guidance misses, it can swing. Also, historically, valuations in this space get stretched. But right now, Elastic looks like a stealth play for people who believe in AI plus data infrastructure rather than flashy consumer names. Now, let's have a talk about Citime Corporation. This is a bit more niche, but could give you big bang. Citime makes precision timing devices, MEMS-based chips that do what older quartz devices used to. These are absolutely vital in smartphones, AI data centers, autonomous vehicles, aerospace. Their revenue is growing aggressively. Analysts are lifting price targets. This niche market high-precision timing is getting more important as everything goes faster, smaller, more connected. Picture robotics, cars, phones, clocks all needing exact timing, chip fabs, circuit boards, oscillators, MEMS resonators, timing chips, they're everywhere. Benefit: being a specialized company in a critical piece of tech. Not easy to replicate. Tailwinds: huge as AI edge computing, 5 grams, autonomous systems expand. Risk: supply chain, competition from established chip firms, price pressure, margin risks. But the upside is good. If timing becomes a bottleneck, companies like Citime will be under high demand. Now, let's have a talk about Newmont Corporation, NEM. You might think gold is old school, but right now Newmont is getting renewed attention. Global macro risks, inflation fears, geopolitical tension, all push demand for gold. Newmont has strong operations, and analysts believe it's trading slightly below fair value, meaning there might be upside if things heat up. Visuals: mines under the sun, gold bars being refined, operations trucks, drilling, shafts, molten metal, strong labor forces. Benefit: gold often acts as hedge when markets get rocky, currency pressures, interest rates uncertain. Also, Newmont has strong balance sheet. Potential upside if gold prices go higher, or if investors rotate into defensive assets. Risks: gold doesn't always go up. It can stagnate. Costs: operational risks. Regulatory environment in mining is usually heavy. Environmental concerns, labor, energy costs. But for someone who wants both growth and a hedge, Newmont might be a very smart pick for October going into 2026. Now, let's have a talk about Harmony Biosciences, HERMI. If you want exposure to biotech with potential downside protection, this might be your kind of play. They're mid-cap, focused on rare neurological disorders, have products in development, and the pipeline looks promising. Analysts see roughly 50% upside potential. Picture labs, microscopes, scientists in white coats, trial participants, detailed molecular models, research whiteboards, DNA strands sketching across screens. The benefit: biotech upside can be huge if a drug trial succeeds, or regulatory approval is near. When markets are excited about innovation, these names can run. Also, this one has asymmetry, downside limited by current valuation versus potential big rewards. Risk: clinical trial failure, regulatory rejection, high costs, long time horizons. So this is more speculative, but could pay off big time. Now, let's have a talk about Leidos Holdings LDOS. If you like companies that blend stability with innovation, this is one to consider. Leidos does defense, federal health, digital services. They're involved in AI, cyber, government tech, infrastructure. In a time when governments want secure tech, contracts with agencies, health systems, cybersecurity, the work is predictable. Visualizing: drones, secure networks, cyber analysts, government labs, satellite imagery, data centers, people in military uniforms, digital maps. Benefit: less volatile than pure AI or biotech startups. Contracts tend to be large, longer term. Mix of defense plus AI could make it a hybrid growth plus safety play. Risks: government spending can change. Federal budgets and regulations could cut back. Cost overruns. Competition. Shifts in policy. But in an uncertain market, having names with both upside and relative safety matters. I want you to think, out of these picks, some are higher risk, but higher reward: Harmony, Citime, some more stable: Newmont, Leidos, others in between: Elastic, Jailer. Diversifying across them gives you exposure to multiple mega themes: cybersecurity, AI infrastructure, rare earth gold hedges, biotech innovation. Before you decide, a few warnings. First, valuations. Many of these are already priced for growth and expectations are baked in. If any earnings miss, or if interest rates go up more than expected, these can drop fast. Second, regulatory risks. Biotech approvals, export restrictions, trade war escalation, mining permits, all could be issues. Third, macro environment, inflation, interest rates, global supply chain risks. Fourth, timing. Getting in too late could reduce your upside. Setting stop losses or taking profits should be part of the plan. Here's how I'd personally approach this. Pick two names you believe in long term. One you want to hold for 3 to 5 years, maybe Leidos or Newmont, and one more speculative: Harmony or Citime. Maybe split your allocation 60/40ths or 70/30ths between safer plus riskier. Keep an eye on news flow, data center demand, biotech trial results, gold price moves, regulatory changes. Use technical levels, entry points after breakout, not at tops. Maybe scale in rather than all at once. If you made it this far, congratulations, because now you know 4 to 6 stocks with serious potential this October 2025. Jailer, Elastic, Citime, Newmont, Harmony, Litos. Each one connects to a big theme: cybersecurity, AI or data, precision tech, gold or hedge, biotech innovation, government or defense tech. That mix gives upside and some buffer. If you want, I can show you possible price targets, chart entries, stop-loss ideas for each of these. Also, which ones might be best for your risk profile. Would you prefer that? Smash the like button if this helped, subscribe for more stock breakdowns, and drop a comment with which one you think will surprise everyone. Thanks for watching.